Hello everyone. So this is a tutorial to just explain some things about psychoanalysis before we go on to explain the spreadsheet. So psychoanalysis basically is about identifying safe entry points and exit points on a chart. So if we look at here, we've got a chart for Sasso. It's starting from 2002. So you can see that the price is trending upwards. Then it sort of reaches a pause. This was in May 2006. Then from May 2006 to March 2007, it really wasn't doing much. So you had that time where the price didn't really go anywhere. So if you check, that's like 300 days where an investor probably didn't get any meaningful return because the share price was stagnant. Then we started moving upwards. Then it went down again for some time. So here it reached a point. Then it reached a bottom for like 185 days. So if you were invested and didn't do anything for the 185 days, you would have lost some of your money. So from top to bottom, that's like 58% drop in whatever amount you have in Sasso at that time. So if you can see, this pattern tends to repeat. There you have a peak, then it drops, a peak, then it drops, another peak dropping like that. Then we had a peak and a drop, and a peak, another drop. Then we have this COVID breakdown in price, which was larger than the other peaks and troughs. So these are the things that you look at when you're considering cycle. So the peaks are considered cycle highs, the troughs are considered cycle lows. So this chart is a monthly chart. So when you're looking at a monthly chart, we would say this would be a yearly peak because we are speaking in terms of months, then a yearly bottom, then yearly peak, yearly bottom, going on like that. So these peaks usually they come in a period of maybe every 6 months. So you get a peak, then you get a bottom, it goes again, comes down again, moving on like that. So here you would be having what are called yearly cycle lows, like this one. Then you have a yearly cycle high. So the yearly cycle lows are the best place to buy. The yearly cycle highs are the best place to sell. Going on like that. So if you are an investor, you want to be maybe buy here, and when you see it maybe stagnating, or here if you want you can just keep accumulating. Then it reaches a peak, you now want to sell at the peak, keep some cash on the side. When it reaches a trough, then you are buying back again what you had sold. Then when it starts to go up, you are now compounding what you have because you have used profit to buy more shares than you had when the price peaked. So you are compounding what you are holding instead of just compounding the growth in price. So that is the basic understanding of how cycles work. Thank you. I'll do another video diving deeper into how these things work.